What's up, investors? You're watching the Chain Trends Crypto podcast. Nothing in the following content should be taken as financial advice. The purpose for this content is for education and entertainment. I'm pleased to introduce my guest. I'll be joined by Michael Nadeau. He's the founder and author of the DeFi Report. There is a link to the description. If you guys should subscribe. It's a really interesting newsletter, as well as a link to Michael's LinkedIn profile. Make sure you give him a follow. He's a great follow. Thank you so much for joining us, Michael.
Thanks for having me.
Could we just start? Tell me a little bit about your background, and how you got in, before you got into crypto and how you got into crypto.
For sure. So spent about 10 years in the commercial real estate business, primarily doing accounting and finance, some operations work as well. Worked for some large commercial real estate operators. One was Boston Properties, and the second was MIT. So MIT has a real estate portfolio within their endowment for investment purposes. So I worked there for about 4 years. And when you're at MIT, you get exposed to some pretty cool stuff, and got exposed to blockchain technology back in 2017. Been following the space for a while. Finally decided that it was time for me to move my career into the space. Spun up the DeFi Report. So I write really about, I have kind of a wide usage of the DeFi taxonomy. So I kind of consider the entire space to be decentralized, including Bitcoin, Ethereum, not just the protocols on top of Ethereum and lending and borrowing, things like that. So do a little bit of Bitcoin mining on the side as well. But happy to be here and chat with you.
Yes. When I was preparing for this interview, I wanted to paint a picture that people who are new to the space, no coiners, can come and kind of get an understanding. A lot of the variables are incredibly nuanced, and they're kind of difficult to explain quickly because so much is involved, so I wanted this video to kind of be like, watch this, and I feel like the macroeconomic backdrop is a big part of that. So can you tell us and elaborate a little bit about what you see there and how we can interpret that as a good thing or a bad thing for crypto?
Sure. So I think you're right. It's a topic that's sort of out of the purview, I think, of kind of the average person, of kind of how does money work? How does the macroeconomic system work? How does our monetary system work? How does this all kind of play out into kind of how we see things in our daily lives? And so the framework that I really use to kind of understand kind of what's happening from a macro perspective really comes from Ray Dalio. So I recommend your listeners check out Ray's books. So he wrote a book called Principles for Navigating Big Debt Crises. And it's really nice framework to just really understand, how long-term debt cycles work. And this, to me, as a former accountant, it's really just math at the end of the day. And what I think I want to hone in on here is every single reserve currency throughout history has gone through these huge long-term debt cycles. And if you really sort of unwind like why that's happening, I think it's important to just hone in on like what is money at a really basic level. And money and credit are the same exact thing, right? So money and debt are the same exact thing. When the government issues $1, they're creating $1 of debt. And so if we just sort of pause there and understand what that means, that $1 of debt needs to get paid back with interest. So where's the money for the interest coming from?
Right.
It has to come from the pool of money already in the system. So if you start to scale that out, you can see that we always have to be creating more money to pay back the debt that was issued before it. So you can understand why the long-term debt cycle just continues to build and build and build, because there's never enough money in the system to pay back the debt. People really need to understand that. And so the framework that I go off of with this is once you get to a point where debt to GDP is over 60%, you start to see a reduction in, as the government prints more money, they're trying to create economic stimulus. But that debt load is weighing down on the productivity of that debt. Somebody that I recommend your listeners check out for this is Lacey Hunt. Some really good research on this topic on just how, as the debt builds in an economy, what that means in terms of growth for that economy. And so you can start to kind of paint a picture of what's going on. You can start to look at the interest rates. Why are interest rates coming down constantly? The velocity of money is coming down. Banks are not lending as much. And you can start to paint this picture of really, you know, how that's going to play out. We've seen this throughout history. And we can kind of I'll stop there. We can kind of get into, you know, how you can start to think about playing the current situation that we're in today.
Right. And like you touched on, there's a debt crisis, right?
Sure.
Actually, there's about a 10-minute video Ray Dalio has, how the economic machine works. It's a 10-minute video. Yep. It's really great. And it kind of breaks down what you were just talking about. Totally. But it's an interesting time because inflation is on everybody's mind, right? Everybody's talking about that. But there's Cathie Wood, who's a investor that I really admire and look up to. I admire her vision, and she talks about deflation being a possibility.
Sure.
You know, with technology and you know, with certain parts of the S curve and that kind of thing. How does technology play into, you know, the macro end with, you know, inflation, deflation? You know, and what else is going on in the macro?
Yeah, that's a great question, and I think that's the piece that everyone's trying to understand right now, because we have and Cathie Wood's a great resource on this, and ARC puts out some really good research. But that's really a question. So what I just described is a situation where you have this building debt situation where debt to GDP, I think we're at about 130% or so right now, which looks similar to, you know, around World War II, like after World War II. And so, but what's interesting that we have today is that we have these forces offsetting the money printing, right? So they're printing money on top of this to try to stop the debt from deleveraging, which would be a really big problem. So once that debt builds up to a certain point, you have to print more and more money on top of it to prevent a massive deleveraging event. So that's accelerating. The printing is accelerating. You can see this in the charts. If you go to the Fed database, you can just see, I think debt to GDP was about 65% just 12 years ago, right? We've doubled in just 12 years. And so you have accelerating printing, but then you have this force on the other side, which is technology. And so the technology we see today, I think this is a fascinating topic, because the technology we see today is information technology, and that is very deflationary. And Jeff Booth is a great resource on this. He wrote the book, The Price of Tomorrow, which really gets into this, and I highly recommend your readers check that out, or your listeners. But the general idea is that technology is stripping jobs out of the system. And so you have this force that's productivity, really, but it's not producing GDP the way the government wants it to. And so they're printing on top of that. A lot of the printing, the crazy thing about this is they're putting all that money into the economy, adding all this liquidity into the economy, and then venture capitalists are taking that and investing in technology startups, which is pulling jobs out of the system. So that's like, that's a big deal. Like that's really what we're seeing get expressed in the economy today, is the printing, deflationary forces behind that. And then you also have a demographic situation where baby boomers are retiring and coming out of the workforce, and that is also deflationary. So these two forces are sort of butting up against the printing, and it's, you know, we're going to see how this sort of expresses itself, you know, sometime this decade.
Right.
Yeah.
Right. And what are you seeing in terms of, you know, the political landscape and the geopolitical landscape? What could we interpret of what's going on? Is it a good thing for crypto? Is it a bad thing for crypto? What should we be keeping our eye on?
Yeah, it's a good question. And like, as I kind of think through all this myself, the frame that I typically work through is like what's happening from just the macroeconomic perspective, which we sort of touched on, and I mostly go off of debt with that. So That tells most of the story. Once you know the debt, you can start to look at interest rates and velocity of money, marginal revenue product of that debt, and all that to get a picture. We know technology is a force on the other side of it. But then, you look around and you see all this political tension. I'm an independent. I don't really get into politics, but I like to understand just what's going on in society. Why is everybody sort of at each other's throats all the time? You see it on social media. You see it. We're having trouble agreeing on anything. And so it's like I get very curious when I see this happening around me. And so I go back in history and I try to figure out what were other periods in history when it looked like this, when the polling was so extreme on both ends, left and right, and Congress is having trouble, just getting along and getting things passed through, getting bills passed, and it's just kind of an odd situation. And so when I look at that picture, and this is just polling, right? Ray Dalio has some great data on this through his new book, which is called The Changing World Order. Highly recommend people check that out. But it's really, we have a picture that looks very similar to the 1930s in terms of the polarization within this country right now. And, you can ask yourself, like, where's that really coming from? In my opinion, it's actually an economic problem underpinning the tension you see up top. So I tend to think that we see political tension, social tension. It's usually a sign that people are unhappy about something else in their life, like they lost their job or whatever it is, and it gets expressed that way.
Right.
So it's hard to put data on that, obviously, but to me, it's a sign when you see this type of just people it's kind of have the inability to get along as a country. It's a sign that there's something else going on under the hood. Is kind of how I look at that. As far as like the geopolitics, what I look at there is, and we can talk about inequality if you want to touch on inequality related, kind of what I just went into, just if you want to get into that.
Sure. Yeah, I would love to unpack that.
Yeah, so let's unpack that a little bit. So the way I look at this is I go back to the gold standard on this. So when we came off the gold standard, 1971, what happened was the United States government went to Saudi Arabia and made a deal to basically price oil in dollars. So everybody was on a fiat currency at that point. We went to Saudi Arabia. We said, we're going to price the oil in dollars. They agreed to it. There's some sort of, we're protecting them with our military. And really what the effect of that is that you've created false demand for dollars all over the world. For any country that wants to buy oil from Saudi Arabia now needs to convert their currency to dollars to get the oil. So that demand for dollars pushes the dollar up against every other currency. Not with any real merit behind it. It's just kind of, you got to get dollars to get oil. So there's demand for dollars.
Right.
And so what that really means is that the dollar is now elevated against other currencies, and America can't really produce exports because the dollar our exports become expensive. This is essentially how that plays out.
Right.
And so how that gets expressed over 40, 50 years is that you sort of gut the middle of the country, right? All the manufacturing has been basically gutted from the middle of our country. And we have the two coasts with lots of jobs, technology, lots of interesting things happening. But you have a middle of the country that's struggling, I think. And that's where the inequality comes from, in my opinion. So it's all related to the gold standard, and then what that means for currencies, and then exports and world trade. So that over a really long period of time, that just catches up. And so we had a financial crisis in 2008, and I think a lot of people lost their jobs. People were really upset, and so you start to see this populism building in our economy, in the social fabric. And that's probably one of the reasons we ended up with Donald Trump as president. And you can sort of paint a picture of what's going on in the world through kind of the way the gold standard changed, and then what that means as it ripples through the economy. So I'll pause there for a second.
Hey, what you were describing about how the coasts kind of flourished while the middle, is that, I know you weren't describing it exactly, but it started making me think of Triffin's dilemma. Are you familiar with that?
Yeah.
Could you explain that a little bit as well? I think I don't know exactly how to explain it. But
it's related to what I was just saying. So it's related to the idea that it's essentially the idea that a reserve currency, the job of the country that has the reserve currency is to export dollars. So because the dollar is the reserve currency, and because you priced commodities in dollars, oil, the rest of the world needs dollars. And so how is the rest of the world going to get dollars? They're going to finance America's debt. So we don't, like I said, we don't really produce the exports like we used to before we came off the gold standard, because the dollar is priced at a point where it's too expensive for other countries to buy our exports. And so what do? Instead, we just consume. Like I have to produce more than I consume. You have to produce more than you consume. Any business has to produce more than they consume. And it should be that way for countries. But if you have a reserve currency, it doesn't apply to you. So we don't produce. We're just consuming all the goods from China and the rest of the world. We're going into debt, and we're printing, and the rest of the world's buying our debt. And that's how we're getting the dollars out. So we're just exporting dollars. And the Triffin's dilemma just says that can't go on forever, because your debt will get to the point where we're at today. So Triffin predicted where we are today.
Right. Yes, he predicted exactly. Right, and that's what
exactly,
in the 60s. What was it? The 60s.
It was 50s, early 60s. Yep,
yeah,
it was after the
60s. Right.
Agreement. Yeah.
Right.
This is true of like every reserve currency that's ever been around. So he predicted exactly what played out.
Right, and this is kind of where we are now. So, and what you're describing again is a very fragile system, right? It's a lot of moving parts, very fragile. So I hope we establish that. And to stay with the political theme or whatever, but I wanted to touch regulation, right? Because we've acknowledged now that the current financial legacy system is in trouble, right? And it's showing. And we're proposing crypto could be it seems like it's the alternative. It's not going to get the institutional dollars or the type of adoption it's going to need, I think, until regulation is clear. Do you agree with that? And what do you expect? What kind of a regulation do you expect?
Yep. No, it's a good point, and it's kind of a hot button issue right now with you probably saw with the infrastructure bill that was being proposed last month. The government finally came around and said, we're going to tax crypto and fund some of this infrastructure, which I thought was kind of interesting as somebody who's been following the space. The government, they've been basically telling everybody that this stuff is a fad or it's not real. But then when it's time to pay the bills, it is real. So I thought that was interesting.
Right.
But I think so. When I was at MIT, Gary Gensler, who is the current chairman of the SEC, he was teaching about blockchain technology and Bitcoin at the time. I didn't sit in any of his classes or anything like that, but those courses are available for free online.
Yeah,
check that out. And you get an idea. This was back in 2018, I think, when he was teaching that class. But you get an idea of how he was thinking about the space back then. And my view on it is, I'm giving you my view of how I think he sees it, and I think he thinks Bitcoin is legitimate and it's here to stay. He's called it a store of value. He even said during one of those classes that Bitcoin could be like a reserve currency. Mm-hmm. So like, to me, he sees that that's a real thing. He understands it deeply, so he knows that and we can get into this later, but he understands like Bitcoin is a merit-based, and it has sound economics backing it. And so he gets that, and it's a commodity. It's not a security. Like he's calling, I think the big regulatory hurdle right now is Bitcoin. We know is not a security. It's a commodity. It's on its own, and I think Bitcoin is safe. I'm not too worried about Bitcoin. The rest of these crypto assets, many of them do look like securities, and so how do you determine what's a security? And that really comes down to the Howey test. And so the Howey test is a way for the regulators to determine like what's security, and that really comes back to, is the general public relying on some other entity, some centralized entity, to do something for which they've invested, right? Like if I give you $10 and you told me you're going to do something with it that's going to give me a return, that would be a security, right? Bitcoin is not security because there's nobody on the other side of that trade, right? It's decentralized, and they've deemed Ethereum to be a commodity as well. But a lot of these do look like securities, and so that's what needs to get sorted out. And I am with you that this is very, very important. It is going to drive adoption once we get this sorted out. So, regulation throughout history, it doesn't happen before innovation, right? It happens, innovation comes, and then you have to change the existing laws and regulations to serve that innovation. So I think we're sort of in that process where the regulators are realizing that this is not going to go away, and they need to understand it. And it's not something where you can take, these are very different things from existing regulations. You can't take a crypto asset like Uniswap or these different things and just put them into the box that you created for a stock or a bond. It just doesn't. It's a completely different thing. So I think it will get worked out. It's going to take some time. It might be messy, but it will eventually get worked out.
Agree. Now, do you think that retail investors should be weary or afraid to hold some of these coins that have ICO'd? I believe was a label or the category that he really said. He said basically anything that ICO'd looked like a security to him.
Yeah.
Would you be?
It's a tricky one. So, some of these networks have venture backing, and they have a lot of advisors and lawyers. So, for example, Uniswap. Uniswap is a protocol that I wrote about, and Uniswap, they're backed by a pretty big VC firm, Andreessen Horowitz, out in Silicon Valley. And so what they did, and they have very smart lawyers that are advising them on how to handle this. It comes back to what I was saying earlier, where is somebody relying on something to get a return. And so what they did is they built out a community for 2 years before they ever issued a governance token or the public was relying on anything. So they said, hey, we built this thing. If people want to put assets into it and start trading on it, go ahead. And so they didn't have a governance token. When they did release the governance token 2 years after the community was already there, then they stepped away and they said, we don't control this thing anymore. So you're not relying on me. So that actually looks like it skirted the security laws.
Yeah.
So that's, I think, what the regulators are trying to, where is the line on this stuff? And that to me looks like they skirted those security laws, because that governance token is now the tool through which the community votes for whatever direction that project goes in. It's not necessarily like a founder or something. So it's tough to say. Like a lot of these things, like, do I think Uniswap's going to get shut down? I don't. I think there will be some. I've already seen that they delisted some of the assets on the platform. I know the SEC was already looking into their marketing and things like that. So I don't think they're going to get. I also know that Robinhood is trying to integrate with Uniswap. So like, I think they got to figure out KYC. The government's worried about, taxes and anti-money laundering, and those are reasonable things that they should be worried about. the issue is that one of the beautiful things about blockchains is that they're permissionless. Like, so something like Uniswap or any of these protocols are accessible by anybody. So anybody can provide liquidity, anybody can use the protocol and earn yield and have, participate in capitalism, which is not how it really works today. And when you put in KYC, you can basically block a lot of people out of the system that really should get access, right? We have 2 billion people that are unbanked in this world. And we should be bringing those people into the system. A lot of times the regulation is trying to protect retail, but they're actually blocking access. So it's a tricky thing. I hope that we can sort it out with crypto because these people deserve to have access just like everybody else.
I agree. And your answer kind of segues perfectly right into my next question, which was in your newsletter, you used a very clever metric to determine adoption. I was like, wow, it's really clever. And it was smartphone adoption. And
sure.
Can you elaborate a little bit on that and connect the dot to smartphone adoption and digital banking and
sure. Yeah, so I think if you go back, I always try to go back and figure out how did Facebook, what happened with Facebook and MySpace and a lot of those early communities and how did they take off? How do they win? And one of the things that happened with Facebook is it might have just been timing. They disrupted MySpace, but the timing of that was very interesting because it coincided with the iPhone coming out and getting into the hands of a lot of people, and then people started using Facebook on their phones. And I think it just really impacted the uses of Facebook, and it built out network effects for that community. And so we're seeing mobile phone adoption really pick up in parts of the world that we don't really think about this in America, but in Africa, in some of the more emerging markets, almost everyone has a cell phone now. They don't necessarily have a smartphone. But we're getting close to that point where you start to really ramp up getting a cell phone in everyone's hand that has an internet connection. That's all you need to participate with crypto. So once you get everyone connected to the internet or connected to a satellite, whatever it is, with a cell phone, to me, that's going to be that will be a part of the adoption story for crypto.
Very nice. And what now? I think it's a good time to start talking a little bit about Bitcoin and some of the blockchains that you like. One of your newsletters, you have a titled "The Bitcoin Value Proposition." I believe it's titled, right? And so could you just talk to me a little bit about that and tell me. Well, first, let me ask you: which blockchain are you a Bitcoin believer, Ethereum, both? Are you
it's a good question because the crypto we do have this space where there's a lot of there are segments, I guess, that really believe in Bitcoin maximalists, and I'm not one of these people. So I look at everything with an open mind, and the things that I like I'm just looking at it from first principles. I don't have any ideology attached to anything, or I'm just looking at this stuff. What problems does it solve? Does it actually add value to the world? That type of perspective. So I love Bitcoin. It was, I think, just similar to lots of people that got into this space. It's typically the first thing you look at. But I am bullish on Ethereum. I'm bullish on some of the stuff being built on Ethereum. I would say that probably 98% of this stuff is trash.
Right. Yeah, definitely.
But it's a big but. If you took, and there are plenty of people that think the whole thing is trash, but if you're right about the 90, that you think all of crypto's fake, you're probably 98% right, but you're so incredibly wrong on the 2% that you're gonna miss the biggest thing since the internet.
Right. Yeah.
So that's how I view the space. It's because it's It's largely unregulated. Anybody can spin up a blockchain or do an ICO and get investment. And so that's what we need to. And I think what's interesting is that once regulation does come, most of that, I think there's like 12,000 crypto assets out there right now. You could see like all of that collapse into Bitcoin and Ethereum, right? Like that's a potential very bullish move for some of these more merit-based blockchains. But to answer your question, so I guess I can go into just the Bitcoin value prop if you want to just start there. So, the way I describe Bitcoin to people, and this, a lot of the reason I'm here is that I just, I work in commercial real estate, or I was working commercial real estate, but people in my inner circle, man, just are really struggling with this stuff. And so I try to explain it in ways that simplify things a little bit for people. So with Bitcoin, I describe it as a scarce digital asset. That's the actual Bitcoin, the 21 million Bitcoin. We know there's only going to be 21 million of them. About 89% are on the market today. And so it's a scarce digital asset, which a lot of people would look at that and say, well, what's the point of it? It's just a scarce digital asset. Okay. Well, it's also a global payment network. And this is really the thing that is confusing. We don't have, like, Ethereum has Ethereum the network, but then they have a separate name for the asset, which is Ether, right? Bitcoin is just Bitcoin. So people don't have the framework to think what's going on here. But what it really is a global payment network. And you can think about that as I explain this, like I explain email, right? So when we built the internet, before we built the internet, we used to, write letters. We'd handwrite letters, and then we would, put a postage stamp on them. We'd bring it all the way down to the post office, put it on a plane, fly it across the world. And then we invented email, and we just do it. We can send communication over this open, global, interoperable communication network. And Bitcoin's the same exact thing, but for transfer of value. It's the same thing, but we can just basically, we don't have to send a wire and have it take 2 weeks to get to Italy, because it went through 10 different banks, and each bank extracted a fee. And it's all because the technology is just archaic. We don't have the global payment rails. They have not been updated. They are not interoperable. These are all separate, bifurcated, independent networks. And so Bitcoin just solves that. You just go peer to peer, just like an email. You cut out all the nonsense, and the transaction happens like that. It's transparent. And when you really think about it, and you don't have to use Bitcoin, the asset, to do this. So we now have a layer 2 on Bitcoin called the Lightning Network. And what that allows people to do is they can access that global payment channel that's interoperable, open for everybody. And you can send dollars into the Bitcoin network and then zip them all over the world and have them land on the other side of the world, convert to Japanese yen, euros, whatever. And you can do that with basically no fee, instant final settlement. And so when you really start to like unwind what that really means, like, you're talking about opening up commerce, international commerce. Like, we can't even fathom like what that really means. Like, the banking system is basically just slowing down commerce when you really think about it. If you open this up, it's a really big deal. That's just on the kind of international stuff. Domestically, you could use the same thing. You could just go to restaurants, right? Restaurants, they operate really competitive business, and they all have to have a cost of doing business of like 2.9% paid to these credit card companies. They can just use the Bitcoin network and cut all that out, right? Anyone operating an online business can use the Bitcoin network. So I think it's just a matter of time before more of these applications are built on top to make it easy for the general public to engage with this. So that's the utility of Bitcoin. So I think this is what people get confused on. They're trying to value what is the utility of that. We've never tried to value a global, interoperable, permissionless
Right.
outside the government channel upon which we can exchange value. So, we couldn't own the protocols that the internet were built on. The internet was built on TCP/IP, HTTP, and then you had SMTP, and they all kind of enable different things. And then you have the internet companies that are leveraging those protocols.
Mm-hmm.
So Lightning Network is just leveraging the Bitcoin network to offer
Yeah.
these services, but we get to own the base layer protocol this time, and that's kind of how I explain it. And then so you're valuing that with a scarce digital asset, of which there will only ever be 21 million,
Right.
and so that's kind of the value prop there. Yeah.
Right. Oh, another just to when you were talking a little bit about wrapping your head around actually what all this means. Just look, just 2 weeks ago, or a week ago rather, Twitter integrated the Lightning Network, and that may not seem like a big deal to a lot of people, but remittance payments, Western Union, and some of the things that happen, right? Like I was reading about these like gangs that in El Salvador, right? They would wait outside Western Unions and they would shake people down.
Yep.
So, this now they could just right from Twitter, you could send Bitcoin, like you said, instantaneously, with finality, instant, in a second,
right.
No danger, no nothing.
No, that's a good point. And just to expand on that a little bit, open protocols, Bitcoin's an open protocol, so anybody can access. Open protocols throughout history have collapsed and compressed costs. And so I think El Salvador is such a great example of this. We're seeing it in real time. So, so El Salvador, I think there's about $400 million of fees that Western Union is extracting from the citizens of El Salvador. These are like the hardest working, biggest risk takers that they're immigrating to America to do really difficult work to support their families back home. And then when they send the check back home or the money order, it goes through Western Union, and Western Union's taking 10 to 15%. So now the reason that, the president of El Salvador said we're going to adopt Bitcoin is because they can access this, and they don't have to use dollars to do it. But just like you said, they can send it direct. They don't have to get on a bus, travel 6 hours to Western Union, deal with gangs. They can send it direct. So what you just did there, and this is, we talked about technology being deflationary. You just stripped out $400 million from Western Union, which is sort of taking it out. And I think this is actually, this is what true productivity looks like. You took that away from Western Union and you gave it to all the people that need that money, that make $300 a month on average, and now they can use it to buy goods and services in the economy. And that is good. That is what productivity and abundance look like, and kind of how technology can do that. El Salvador does not have the resources to. And the other thing here is, Twitter just integrated, as you mentioned, into they integrated the Lightning Network onto Twitter, so people can send value just on Twitter, which is a really big deal. And so, basically any of El Salvador's citizens on Twitter now can send value all over the world at no fee. El Salvador doesn't have the resources to build a global social network,
right,
or a global payment network to do this. So these are open, the Bitcoin network is an open protocol. Twitter is not an open protocol, but anybody can access that. And so now you have this situation where they are on the bleeding edge of financial innovation because they just opted into an open and permissionless global monetary system. So very, very cool example. I mean, I think they're for a tiny little country, they're gonna. I think there's got to be a lot of countries that are similar to them that are looking at this, trying to figure out how they can
do it, right?
Yeah.
And now, and look, I think just the other day I read Brazil started a proposal to make Bitcoin legal tender now, and they're one of the I don't know, top 50 economies in the world, right?
Yep,
like I mean,
so
so
sure, yeah.
Now we're starting to see
Ukraine. I saw they passed something through their Congress to make Bitcoin legal tender. I know Panama has been mentioned a few times. So it's just if you're a small country, it's a no-brainer, right?
Right. It's definitely no
Yeah.
brainer. And it was also interesting, I thought too, is El Salvador, you're thinking, and then they go and they bring something with them like the mining, volcano
Yeah.
mining,
Yep.
and they're trying to do that now. So, and it's still so early in the space that, with participation, who knows what could happen and what it could evolve to. So
Sure.
it's
Yeah.
such an exciting time to be alive. It's such,
For sure.
such an exciting stage as well.
Yeah.
And you touch in your newsletter, you touch on it a little, that crypto, how quickly it's growing. Was 113%.
Yeah, it's
Elaborate a little bit.
averaging, yeah, it's about 113% a year, which is almost double what the internet, the speed the internet was growing at. So the adoption, we haven't seen an adoption of any technology quite as fast. And I think we're on pace to get to 1 billion users by like 2024 or so, and then potentially 3 to 4 billion by the end of this decade if we stay on that path. So if that's a big deal. I think people, Jeff Booth talked a little bit about this, like exponential growth, and kind of it's hard for people to see this coming, but you have all these various technologies, not just blockchain, AI, that are sort of combining here as well, that are going to feed off each other, and that's what Kathy Wood talks a lot about this. But it's going to be interesting to see how this adoption combines with AI, combines with all the other technologies that we're already leveraging, IoT and all this. It's going to be very disruptive, and it's why I've moved my career into this space.
Yeah, agreed. I'm with you. I feel the most safe with Bitcoin. It's what got me into the space. It was the only asset, the only crypto I owned for a while. And just to be engaged, just to keep my data. I started to look into some of the other projects, and really where I saw the value and where I really started to understand it was when I actually started using the protocols.
Sure.
Especially on Ethereum, when I started using Uniswap, when I started using, Ethereum itself, that's really when I started to go, wow, this is something. This is really something. What are your thoughts? What's your take on Ethereum, and what are some of the projects that you're interested in that are built on Ethereum?
Sure. So yeah, I mean, I am interested in Ethereum. The way I describe these is like, I don't think Ethereum's trying to be money. Like Bitcoin to me is on its own island, right? It's the only crypto asset to me that is basically trying to be money or a monetary asset, and that game's over. Like it's the Bitcoin Cash is not going to rise up and take over Bitcoin. Like that game's over. Network effects just flat out matter. So that's done with. Now Ethereum, you could say they are competing with Bitcoin for the same pool of capital that gets invested in the space, similar to like how Netflix is competing with Google or something, even though they're not the same thing. That's kind of how I look at these two. Ethereum is more, so people say Bitcoin's digital gold because of the scarcity of it. And I would say the description of Ethereum as digital oil is pretty accurate. So I view Bitcoin as this global payment network, and Ethereum is more like a world computer. And it's essentially the grease. You need Ethereum to do a trade on Ethereum. You need Ethereum, like every transaction needs a little Ethereum. So it's sort of like you need Ethereum to build something on Ethereum. It's like the grease, the oil that is just allowing that whole ecosystem to function. And Bitcoin, when that was created, we solved a number of things: digital scarcity, the ability to transact outside of a central government, a number of breakthroughs there. But we kept it really simple. Bitcoin is just trying to be like two things, like a scarce asset and a global payment network. Ethereum is trying to be much more than that. So with Ethereum, we've introduced the concept of like programmable money, right? So now with Ethereum, we're really utilizing smart contracts. So a smart contract, I think people can think about a smart contract as just like the way you would think of like a vending machine, right? So like it's like an if-then statement. If B9, Snickers bar. So when you start to think about that in terms of settlement of assets, you think about how the financial system works today, basically everything's a smart contract.
Right.
So you can see that this can really disrupt a lot of what's going on Wall Street today. And with that simple functionality of a smart contract, when you combine that with oracles where they can go out and fetch real world data, you can start to do some interesting things on Ethereum. So lot of cool stuff happening there. It's a different system. It's moved away from proof of work, so they're now proof of stake. It's going to be a little bit less energy use. I have some thoughts on that with Bitcoin. We can talk about that if you want. But I am bullish on Ethereum, and it may have more growth on the upside, like in the near term. Hard to say, but I like a lot of the projects being built on top as well. So as far as like the DeFi sector, I like Aave, I like Compound, I like some of these protocols, Balancer, interesting protocols, Uniswap, SushiSwap. You've got insurance protocols now that are being built on Ethereum. That's Nexus Mutual is an interesting project. So I try to find, like, I just look at these things from first principles, like what do they actually do? What problems do they solve? Why, all of these networks are functioning with supply and demand is organically forming. So you need to understand, like, why is the supply there, right? Why do Bitcoin miners, why are they economically incentivized to be there? And if you can understand that, then you can say, all right, this makes sense. This is sustainable. And so that's how I look at these things. Like, why is supply here? And why is this better? And then why is demand here? Why is this better for the demand side of that equation? So.
Yeah. And just to unpack a little bit about, proof of work and proof of stake.
Sure.
And that's really it's a pretty big difference because it's how transactions are verified on the networks. How energy and electricity plays into that. Could you just describe that a little bit and give me thoughts?
So Bitcoin, if you go all the way down to the base layer on this, what you will find is that to produce a Bitcoin, a miner has to take a ASIC machine, which is just something that has a really high amount of computing power, which is what these ASIC miners are, and those are composed of commodities, steel, various commodities that went into that, and so that's like the base layer. So you converted a commodity into this product that's now hooked into the internet and does compute, and that is what you're really doing there is you're then leveraging that machine that's just basically running compute and solving math problems, and that's validating the transactions on the Bitcoin network. It's using electricity to do that, and so what you're doing is you're taking a commodity, running it through using energy, and then converting that into a digital asset. So to me, that is and everything in that equation is rooted in sound economic fundamentals, right? You're taking land, labor, and capital and converting that into a digital asset that is storing the energy of those inputs, right? I think that's just a real basic, fundamental, merit-based situation. If you compare that to how a dollar comes into the world, it doesn't look like that at all. It just looks like someone printed a dollar. So people say, like, the value of anything will always collapse to the price that it took to produce that. So when you think about the difference between fiat currency and Bitcoin, you could see that there's some real merit behind Bitcoin, and I don't see it with fiat currency. So fiat currency is backed by our military, essentially. So
Right.
It's a little different situation. But to me, that's proof of work, and the whole idea behind proof of work is everything that happened to that equation somebody had legitimate consideration. An entrepreneur had to invest land, labor, capital everywhere through that equation to produce Bitcoin, right? So there's just merit there. Now, if you look at the banking system, you just have a central organization that has the rights to print money, and then that goes, it's sort of the Cantillon effect, but that doesn't necessarily go to the areas of the economy that it's most needed. And so that's proof of work. Proof of stake is what Ethereum is moving to, and that is a system where rather than leveraging electricity, they still are leveraging electricity in some ways, but you're taking the actual Ethereum asset and you're staking that into a pool where that's validating the transaction. So you still have some consideration there, where somebody had to get that Ethereum in the first place and stake it, and that's what's validating the transactions. That's what's providing security. There is a big difference here. Like, energy is really what backs Bitcoin. Energy has had value, throughout history, right? That's just a fundamental thing. And the thing that's really backing Ethereum now is the Ethereum token itself, which has been around for 6 years. So, that's what, like, a Bitcoin maximalist could look at that and just say, this thing is going to collapse because it's not really backed. It's backed by a digital asset that we don't know, that we don't have the history on this thing to really understand if it's going to be here forever. So I would say that's the big difference, and that is a big difference. We don't know for sure if Ethereum is going to make it. I am bullish on Ethereum, and you don't have to leverage electricity. And a lot of people will say Bitcoin uses too much electricity. I disagree with that, and we can get into that as well, because I believe that Bitcoin's energy use is mostly renewable energy. Yes. And I can get into, like, I actually think Bitcoin's going to essentially force us to start leveraging more renewable energy resources just because of the economic incentive structure related to Bitcoin mining and the need to always be getting cheaper and cheaper electricity. So.
Yes, please. Continue with that. That's very interesting. I don't know if you're familiar with Marty Bent or those guys. Yeah, but he does a great job explaining this, and how Bitcoin actually targets renewable energy. I think it's like 57% or 56%.
Yeah, the Bitcoin Mining Council, I think that was the number they came to. And people, the whole story is like, you get these headlines where it's like Bitcoin uses as much energy as a small country, and that is true, right? That's true, but it's just kind of a disingenuous headline because YouTube uses as much energy as a small country, like all these data networks, and it's more about, like, what does that actually mean? So Bitcoin today uses about, I think it's like 1/10 of 1% of the world's energy. So it's a really, really small footprint. And then you take, and that's the total energy use. And then you take the renewable portion of that, and that's not going towards fossil fuels. So it's even less. As far as, like, the push towards renewables, the whole race here, this is just an arms race among Bitcoin miners to find the cheapest energy. So the reason that the hash rate was so high in China before the crackdowns is because the Chinese Communist Party, and this is a very interesting story. It's an interesting juxtaposition of socialism, communism versus free market capitalism. But they overbuilt hydroelectric dams in the middle of the country because they expected population centers to come around these energy infrastructure that they built. And because that population center isn't there yet, and they're producing all that energy through these hydroelectric dams, that's just wasted energy. That's just curtailed energy. And so the Bitcoin miners went and grabbed it. It's just free market, capitalism just playing out right in front of your eyes there. And they're there because hydroelectric is one of the cheapest renewable energies you can find. So that's why they were in China. And now that's getting scattered, throughout the world. A lot of it's coming to the States, to North America. We're seeing a lot in Texas. Canada is picking up some of that. But at the end of the day, miners, they need cheap energy. And what the other thing that's interesting about this is that Bitcoin miners are mobile, right? So energy, where energy is produced, you can only move it about 500 miles. So, which is why you see the big substations. They're always right outside the cities or the towns. We don't transport energy across the country. So if you have an area that has some curtailed energy, some energy that's not being used, which we have it's everywhere in the country. We always have to have more energy being pumped through the lines than we use, right? We can never have a time where there's not enough electricity to turn the lights on. We just always have extra. And Bitcoin miners can go wherever the extra is, tap into it, and be a buyer of that energy, which then reduces the cost of that energy for that community, because that curtailed cost gets passed back to the community. So, like, when you really start to think about it from what it can mean in terms of picking up all of this curtailed, unused energy, that is good. That is good for everybody. And then it's going to drive demand for renewable energies, for solar, for wind. And it just, to me, the whole story behind this is just completely confused. There's like this ESG narrative out there. And it's just, people are not, energy is a complex thing. Bitcoin is a complex thing. The whole narrative around this is just really backwards right now. And I think the Bitcoin Mining Council is doing a pretty good job of getting the messaging out there that this is something we should be embracing, not trying to stop it. So,
we spend energy on much more frivolously than on an open global monetary network.
Right.
Like what's the ESG on video games, right? Or what's the ESG on Christmas lights or something?
Exactly.
I mean? It's
exactly.
like they pick and choose, but I eventually think that FUD will go away once more and more people become aware.
Yeah, I would agree with you. Yeah, and I think it mostly comes from people that don't understand the value prop of Bitcoin. If you understood that it's something that can give access to banking to 2 billion people, you might rethink that use of energy. Right. And the other thing to mention on that is just like the really, like, the progress of civilization is based on energy use. Like, you need what's his name? Harry Suddock tells a good story about this. Where he works for, I think, Grid. It's like one of the big miners, and they got a contract in somewhere in the States where there was going to be a hospital that was being built for a community of about 17,000 people, and so they had to add infrastructure to get the electricity to this hospital that was going to be built. But something happened with the finances of that hospital. They ended up having to cancel the project, but they'd already built out the infrastructure for the electricity. And so that all of that extra cost would have gotten passed back on that community. But instead they called up Grid, and now Grid's a buyer of that energy. And that's really helping that community. And just to keep going on this a little bit, like if you have sources of energy in parts of the world, like hydroelectric energy, like there's areas of Paraguay, there's areas all over the world where we have untapped energy sources. And if you start to tap into that with Bitcoin, you're leveraging that energy. You're potentially building out population centers around some of these areas, which is good. These emerging markets, which is what creates all productivity. You got to have the lights on for people to have schools, to people go to work, for people to educate themselves. So that's part of the story as well, I would say.
Yeah, and I mean, this is obviously, in my opinion, I think, to circle back to something that we talked about a little earlier in the content, you talked about how divided we are, right? Mm-hmm. I feel like this should be a topic that everybody, it doesn't matter where you fall in the political spectrum, especially, like the left would more or less, they talk about equality and humanitarianism, that kind of stuff, and then the right is more like you know, they're kind of not really a fan of immigration, right? And it's like, well, for the right, it's, well, those places will get built up. Nobody's trying to leave. For the left, it's like it gets to help those places. It's in my head, it's like a no brainer. Like it doesn't matter where you fall, you know?
Yeah. No, I agree. And I think Bitcoin, I think that's one of the things I like about Bitcoin too, is I don't think it doesn't really have a political affiliation. I think like, you know, it was like the libertarians a little bit at the beginning, but like to me, it doesn't really fit on either side. Like the left is like pro technology, I guess, and like it's technology. The right is more for like hard money and things like that. So it kind of like it could be, like you said, it could be the bridge.
Both.
I hope
that,
so.
Something that we could rally around. And
sure.
yeah, that's really all I got. Michael, thank you so much for joining. I had a great conversation. You know, you're well. I hope you come back on again someday.
Appreciate it, man. Yeah, happy to come back.
Definitely. If you guys are still watching, thank you so much. Be sure to hit that like button. Remember that this is not financial advice. This is for entertainment and education. Thank you guys for watching, and I'll see you next time.
Awesome. Take care.